Good day. And boy, I'm fairly happy today. You know, I was looking for the slow stochastic readings to be lost and get a pop in the stock market, and here you are. So we're on Tuesday right now, and this is the 17th of May, 2022, about 4:40 p.m. So, as I said, we got the rally I was looking for, the break in the dollar. Many of the currencies got a bounce off of that. We're still going with the copper, the silver, the palladium markets all running to the upside as they too lost their embedded readings. Part of it has to do with the fact that China's coming out of COVID. Part of it has to do with the market just looking and probably in need of, from time to time, in bear markets to get a bounce. Do I think it's a change of trend for the stock market? Follow my head. I do not. Getting a bit of a correction also in the energies. Why? Well, number one, they got up to their upper Bollinger Bands, ran out of momentum, not embedded, just overbought. So let's take a look. On the S&P for the week, you are now up 1.62%. You see you're getting a little bit of a bounce. Coming off these lows, why not? The market still has a pattern of lower highs, lower lows. So any bounce you get in here doesn't change that pattern. And the market probably caps it all off by getting to the 18-day average and running out of momentum. Now, it's not easy to sell that number because to do so, you still got to have a stop up almost, 180, 190 points higher. That's too much. So I look for the market to get there and to develop a pattern where it starts failing against that and resumes to the downtrend. We'll see if I'm right or wrong if that shows up. When you look at the Bollinger Band, you've walked away from that lower band. So the Gorilla Glue trade, as I like to call it, began back here, did have a pause, and then locked in again. That's unusual, but it did it. And now this bounce, okay. But is there anything on that chart that looks like it's changing a trend? I don't see it. Could happen, but I don't see it. What I think caused this whole bounce was this. You had markets that were coming down. You had, if you go back with me in time right here, not here, but right here. Day one, where both numbers are under 20. Day two, next day they did it. Day three. So you got it all locked in. Now, when you get a market that does that right after that, and the red line turns up, if that line doesn't get knocked down right away the very next day, and this was Friday, then I'm going to look for price setting up to run to the 18-day average, and that's exactly what happened. You didn't get knocked back yesterday. So you went into the pause. The Tuesday moved down, but what did I tell you? I said it yesterday. If I'm right, this is going to culminate in a move to the 18-day average of closes, and that seems to be what the market is trying to do. In the NASDAQ, it is the same story. You can see how you came out of that, get up there. By the way, the rally up here today, you got to 12,578, which is over 12,533. So you no longer have the pattern of a lower, if you will, lower and lows. This market had this ugly pattern anyways, where you had a reversal day to the upside, then one right behind it to the down, and culminated with a big break. That part's over, but I don't see the market lifting itself on this chart formation that says, hey, I'm going back up to these highs. I just don't see that. When I look over at the micro Dow, all right, did we ever embed here? So let's take a look. Real careful. Here we go. Not there. Follow me. Day 1, 2, 3. 3 days in a row, both numbers under 20. You lose it on the fourth day, just the way you did in the S&P. You paused a little yesterday, and then today, popping up. I look for the market to make its run to the 18-day average and magically run out of steam on the market. Then in the Russell, same thing. And look, you're probably going to hit that 18-day average. Now, the Russell has just been one of these markets that are locked in on a downtrend, getting a bounce. I don't think you're going to get this again for a while. Rather, what I think the market's going to do is peak out up here and then try to work its way back down. You saw Fed Chair Powell today saying the Fed's going to do whatever it has to do in order to get inflation under control. That's just a code word. They're going to keep raising rates until they break the market, all right, of inflation. And I'd look for that to happen. On the VIX, if you get my market letters, and you see what I was writing. I was looking today for the market to get right here into the 25.30 level. In the VIX, you got to 25.51, pretty darn close. So you're about there. You're already oversold. I'm not looking for a lot more decline on the VIX, which tells me be careful. If it turns up, the stocks are going to turn down. In the bond market, the battleground has been the 18-day average. And study this. This market has had, since back in March, once it got under the 18-day average, it basically has trouble just getting up to it, and then it gets thrown back under it each time. You haven't had one instance where you've gone back to the upper Bollinger Band since the beginning of March. That's a pretty bearish set of fundamentals, or technical picture, I should say, not fundamentals. In the 10-year note, are we going to end this pattern of higher lows, higher highs? Well, it looks like you're trying to do that. The market had yesterday an outside day to the upside. You took that out today, you could be headed to the lower Bollinger Band unless you take out, again, not today, but yesterday's high. You'd have to do that to prove that the market's not going to fall apart on you right here. My work says it will. In the dollar index, right down. Once you lose the embedded reading, just follow me here. If you look at yesterday's close, you're on the verge of it. You had an 80.25. You opened lower today and just let go right to that number. Doesn't have to go any lower. We'll see if the market wants to hold here or make the run to the lower band. But as a bull market, the last time you visited that was the beginning of April. And then you had that where you locked in, as you can see, these bullish embedded readings, and you just ran away. This type of run does get some profit taking. The Johnny-come-latelys go, oh, maybe the market's peaked out on me. And for the time being, it has. You have broken the pattern of higher lows, higher highs, but I don't think you've entered a bear pattern either. In the eurocurrency, you had the flip-flop. You had this embedded reading that, if you take a look with me, yesterday you were on the verge of losing the embedded reading. Once you opened today, because you were right near the 20 level and you closed near the day's high, that's going to jump on you, which is exactly what happened. But notice where it stops, right at the 18-day average. I think you're running to the end of a short covering rally here. British pound, okay, now this one's interesting. The British pound yesterday lost its embedded reading. Where should it go? You know what I teach. Once you do that, 18-day average, boom, you went right there. Now, what do you do next? I don't know. This is an interesting one. It's just got its momentum going. It could run to the Bollinger Band, but I have doubts about it. I think it's just going to play around here for a little bit and churn. That's pretty much all that I'm going to see out of it. When I step over to Bitcoin, still very much in the lower highs, lower lows. I had a friend that's a Bitcoin person, to say the least, and comes over and I go, no, I don't buy Bitcoins. And today he's telling me, you don't understand, this is the time of your lifetime to come in again. I said, did you ever sell them out when they were at 70? He said, no, they're going back to 100,000 anyways. This is it. I said, okay, I understand. So I know he ran to his office and bought today. We'll see if that does him any good. In any case, I still look for more of a rally. He asked me that. I said, you lost your embedded reading. The odds favor you're going to make a run back towards wherever that 18-day average is. He made me sit here and teach him one day the charting course, and I did. You know, he's a good friend, neighbor. You got to be nice. And his car needed air this morning. I happen to have, I don't know why. I'm one of these guys that have all these tools, and I probably have a hose that's 40, 50 feet long. I can get out of my garage. It went right around, and he was able to bring his car by with no air in it, and we fixed it. He ran, of course, to Costco to get it fixed. You can see you're underneath the 18-day average, still falling apart, nothing there. And this is why I think you're backing off on the energy. It's not that it's bearish, but you're not trending at this point. Now you're caught in the waves, and we've talked about this. This is not the first day we're talking about this. I said you're suddenly in sideways action. It's broad, but that's where you're at. And it's the same thing in WTI. It's broad, but that's where you're at. You have a higher high, lower low pattern. You're going from upper band to lower band to upper band, getting thrown back. Where the power of the market, in my opinion, still is the gasoline. It has the embedded reading. I think tomorrow, If you're down, the pros will step in if the red line is still over 80, and because it's at 87, it'd have to break quite a bit to get under 80. So I'm looking for the pros to step in tomorrow as the buy. In the nat gas, you're in an uptrend as well. Higher lows, higher highs, supports back here. Can the market make a run for the 880 level? You know, this morning I was saying, and I was being facetious, I said, are we going to get a 9 in front of natural gas? And it certainly looks to me like a hot summer would give you just that type of reading. It'd be hotter in more ways than one. If you're looking to put together your trading and you're trying to figure out what do you want to do, we have a trading kit you might want to take a look at. First, it's got a lot of chapters involved in it. It comes to you as a link. You click on the link, it'll open up. You can put it right on your desktop or wherever you want it to be. And it's got every kind of tool for the beginner and the better trader. I talk about chart patterns in it. I show you the 14 very typical chart patterns that traders rely on. I have 2 video courses for free in it. Pivot points and the Arun indicator. If you haven't used pivot points in a day trade market, you're going to love it. It's an in and out type of tool. Cause and effect talks about M1, M2 money supply, and then forever. The CME group's always coming out with new courses. Most people don't even bother with them, which is a sad thing. They're very good. And we link to all them for you, so we keep the links fresh and you can work with that. In addition, charting software packages. And while you're signing up for this, you can sign up for our free market information. We'll give you a week sample of what we do so you can see it. We're not going to give you months on end. We don't believe in that. Look at it for a week. You either like it or you don't like it, and we're worth coming with. How do you get this? Go to our website. Under the word free offers and/or just take your cursor, move it back right up here, and you'll be able to see it there. That'll take you right there as well, and away you go. I'm Ira Epstein. Let's see if the markets do what we're talking about here, and I'll see you tomorrow.